I would argue even in a pretty deep recession, I just don't see oil prices going below $80, maybe even not even $90 because of years of underinvestment.
Overall, we're looking at an economy losing momentum faster than what we anticipated. So right now we have a recession call for beginning the first half of next year, but I think if anything, the data shows that timing looks like it could be even sooner.
It was a mistake, and I apologize for it. I think in hindsight it was the wrong thing to do. So I just want to make absolutely clear that there's no place in this government for anybody who is predatory or who abuses their position of power.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Boris clings on. The embattled UK Prime Minister names Nadhim Zahawi as his new Chancellor after Rishi Sunak resigns. We're live at Downing Street. Huge swings in the markets. The euro tumbles to a 20-year low. Oil steadies around $100 a barrel after yesterday's 8% plunge. Plus, chipping away, the White House is set to pressure chip-making equipment maker ASML to cut sales to China as it looks to curb Beijing's rise. Now, first is the markets. First things first, I can't get my words out because we had all of that political turmoil in the UK. A lot of us actually stayed up through the night to see what was happening, who was resigning next. No matter. This is what the markets are telling us. European stock 600 gaining almost 2%. If you look at U.S. stocks futures, they're fluctuating a little bit. Fragile sentiment is still there, but it's nothing like we saw yesterday. So yesterday there was definitely a worry of a recession. Again, it's all to do with inflation and what central banks will do. But yesterday we also saw oil below $100 a barrel. This is not what we're seeing today, but we will get oil in just a second to look at some of the market moves. For the moment, it does seem that there's a bit of bargain hunting maybe in some of the technology stocks. But as I say, U.S. futures actually fluctuate. So let's get straight to the map to see if there's any difference compared to the proximity of where you are. For example, the DAX gaining 1.2%, the UK also strong gains, and this is led by oil. Yesterday, oil down, and then you have this divergence between what Citigroup say and what Goldman Sachs. I have rarely seen such a divergence in terms of forecast for the price of oil. It ranges from anything from $65 to $150. Now, Johnson is on the brink. That's the front page of today's Times newspaper as the UK Prime Minister fights for his political survival this morning. His government has been rocked by the resignations of Chancellor Rishi Sunak and the Health Secretary Sajid Javid. Both quit over revelations that Johnson lied about the extent of his knowledge of misconduct allegations facing a newly appointed cabinet ally.
It was a mistake, and I apologize for it. I think in hindsight it was the wrong thing to do. I apologize to everybody who's been badly affected by it, and I just want to make absolutely clear that there's no place in this government for anybody who is predatory or who abuses their position of power.
Now, Bloomberg's Lizzie Burden is at Downing Street. So, Lizzie, it's been described as the biggest day of drama in Westminster since the fall of Margaret Thatcher. What exactly happened last night, and are we going to get more resignations today?
I'm not surprised you stayed up all night watching it, Francine. It was a dramatic one. It started with the surprise apology by Boris Johnson for his handling of the Chris Pincher affair and the alleged sexual misconduct on that MP's part before he was rehired into the government. And then it was quickly followed by the resignation of Sajid Javid, the Health Secretary, and then the Chancellor Rishi Sunak in the middle of a cost of living crisis. Both of their resignation letters focused on Johnson's integrity. They said they couldn't publicly defend what he was asking them to defend in public anymore. And then it was followed by the resignations of a string of junior ministers. So it really does seem that the tide has turned. But Boris Johnson came back with an emergency reshuffle. He replaced Sunak with Nadhim Zahawi. We can talk later about what that means for the UK economy. And he also picked Steve Barclay for the health department. But key figures have come out in support of the Prime Minister. Dominic Raab, Liz Truss, Priti Patel. We're just watching the flow of cars to see whether there'll be any more high-profile resignations this morning. Because just recently on the terminal, we've had a report by Bloomberg's Alex Alex Wickham, saying that Johnson is on red alert for signs of a coordinated plot from his ministers to bring him down. And if 6 or 8 of them quit, that would leave him struggling even to form a cabinet.
So, Lizzie, what exactly do you know about the replacement of Rishi Sunak? He was business secretary. He's come on Bloomberg TV. How will he deal with inflation, and what will he do with taxes?
Well, it was one of the big points of contention in Rishi Sunak's resignation letter, actually, his differences from Boris Johnson on how to handle the post-COVID recovery. He said that if something is too good to be true, it probably is. Their approaches are fundamentally different. Well, in Nadhim Zahawi, Boris Johnson is likely to have more of an ally in his boosterism, a willingness to be fiscally loose. Boris Johnson said yesterday that he's reported to have told MPs that tax cuts could now be on the way. Zahawi reportedly is perhaps willing to reverse the plans for a corporation tax cut that was down the line. He was speaking earlier. He said that he still is determined to be fiscally responsible because, of course, all of this is going to require borrowing, and the Bank of England is going to be really watching out for how loose this government will be fiscally because of the consequences for inflation.
Lizzie, thanks so much. Lizzie Burden there with the very latest, of course, on all of this political turmoil. Now, joining us, Mij Rahman, Managing Director for Europe at Eurasia Group. But Mij, you are one of the great political watchers, not only of the UK, but of the rest of Europe. Do you think Boris Johnson can survive this?
I think it's unlikely, Francine. I think, we had a 70% conviction that Boris Johnson would face a vote of confidence before the Pincher affair. There's obviously upward pressure on that number now as MPs manoeuvre to amend the rules to enable a confidence vote before the July recess. I think the likelihood that happens is quite substantial. We were at 80% conviction that Johnson would not lead the Tories into the next election. And I think there's obviously upward pressure on that number in light of what we've seen over the course of the last 12 to 24 hours.
But, Mij, so game theory out for us. What do you think happens? Is it a confidence vote? I mean, theoretically, they can't cast another, they can't, do another one unless they change the law. Or is it just more resignations and he'll decide to go?
I think it's probably a combination of both, Francine. So I don't think we will see senior cabinet resignations now. I think the moment for that has passed with Sunak and Javid's resignation yesterday. We're seeing more PPSs and junior ministers resign this morning. I suspect that trend will continue. I think the big piece to watch now is the vote of confidence in Parliament, and that I think is really I just think a question of timing. Does it happen before the July recess or does it happen after? Remember, Francine, we only need 32 MPs to switch their vote from how they voted around a month ago in order to depose Johnson, for there be a majority to remove him. So, can 32 MPs switch sides on the basis of these unforced errors that we're now seeing again? This was a totally unforced error, something Johnson could have got in front of. He's lied about it again. I don't think that number 32 is unachievable. I think it's quite likely. The key question is timing.
But Mij, does it make a difference if it's before the summer recess or afterwards? If you do it now and if it's pushed now, is it more likely that actually the Prime Minister is out?
I think there's certainly momentum behind doing something immediately. There will be changes to the makeup of the 1922 committee. That's going to serve as a proxy of whether we see a vote of confidence take place before recess. But even after, Francine, there's going to be a number of challenges the government's going to be dealing with. The cost of living issue is not going to be getting better. You've been talking with Lizzie earlier about the inflationary and the dynamic there on inflation in the state of the economy. There'll be the parliamentary inquiry into whether Johnson misled or not Parliament. That's also going to be a very difficult moment for him. So there's going to be a number of challenges down the track that suggest the parliamentary party is probably going to remain unhappy, and the concerns that they have are only indeed going to grow. So there's a lot of discussion now this morning about tax cuts and whether Zahawi is more likely to implement those. I think, our base case is he won't get to. I think the government is so inherently unstable. None of this policy or economic agenda, I believe, is going to see the light of day, because I think it will be overtaken by political events, whether now or, as I say, very early in the third quarter, when after the recess.
So, Mitch, who do you think the next prime minister is? And actually, is it someone that's still close to Boris Johnson, or will that be a person that's unelectable or unchosen because they've stayed loyal to the prime minister?
So, Francine, that's a very difficult question to answer. You saw what happened to the Labour Party. The pendulum swung. They went from a Jeremy Corbyn to a Keir Starmer. It's not inconceivable that one of the One Nation Tory MPs, a Tom Tugendhat, a Jeremy Hunt, a Penny Mordaunt is a name I'm hearing more and more, that a more centrist MP emerges, Tory MP emerges, indeed, if Johnson is deposed. But that's a difficult question to answer. The parliamentary shenanigans around how the Tory MPs decide which two MPs will be on the ballot and face the contest among Tory members. That's a really difficult and uncertain issue to see through. Where we have growing conviction is on the outcome of the parliamentary election, the general elections in 2024. Yeah. I mean, our base case now is a Labour minority government with support from the Lib Dems and the SNP, regardless of who overtakes Johnson, either before July, in the short or the medium term.
Mitch, talk to me a little bit about what you think actually Chancellor Zahawi can do. So you basically believe that he has very little political power because of this political turmoil that's unlikely to empower him. But is he putting through tax cuts because he thinks it's the right thing to do for the economy, or is it just to pull at the heartstrings of the righter hand of the Conservative parties that don't recognize all of these aids and what's happened to taxes because of COVID?
I think probably the bigger driver is Johnson needing to shore up the right of his party. Tax cuts, I think, are really the last throw of the dice to try and get the government through the July recess to survive in the very short term. I think that's why they're being talked about. That's why Zahawi's on the airwaves doing all the media interviews this morning. There was clearly a difference between Downing Street and Sunak's view of the economy and what it needs over the short and medium term. There was no real shared economic agenda or philosophy between those two men. I think Sunak was absolutely of the view he had to bear down on the debt. It was already of the view the debt to GDP was substantial pre-COVID. Post-COVID, obviously, felt there was a need to begin bearing down on that debt sooner rather than later, with a view to delivering these tax cuts next year. That was effectively, I think, his fiscal strategy. Zahawi, I think, has probably got the job because there is a more consistent agenda between himself and Johnson that will see more ambition on cost of living, more front-loaded tax cuts in the very short term. As I say, I think the larger driver for that is probably political and the need for Johnson to shore up certainly the right flank of his party. But, will that be enough? If you think about people like Steve Baker, Andy Harper and others, are they really going to be satisfied by that in light of what I say was another completely unforced error, the Pincher issue, and something Johnson lied about and will have lost further confidence of those MPs that supported him only a month ago. So I think it's probably too little too late.
All right, Mitch, thank you so much for all of the insight. Mitch Rahman, their Managing Director for Europe at Eurasia Group. But now we're also getting some breaking news from the Chief Economist at the Bank of England, Hugh Pill, saying that the Bank of England is now willing to act faster on tightening if needed. Again, we did see a change in language in the last Bank of England report where they said they would, of course, watch and they could be more forceful. That led to a lot of questions on whether they could go through a 50 basis point hike at the next meeting. Now, coming up, the OPEC Secretary General Mohammed Barkindo has died. He was an oil industry veteran who steered the group through the creation of the OPEC Plus alliance. He had always given Bloomberg TV also quite a lot of time, a consummate politician, one of the very best in dealing with some of these very complex issues. He also had a sense of humor. We look at his legacy next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the OPEC Secretary General, Mohamed Barkindo, has died in his native Nigeria. That's according to officials. Barkindo is an oil industry veteran who steered the group through the creation of the OPEC Plus alliance. Well, joining us now is Bloomberg's oil reporter, Paul Wallace, who's in London. Paul, first of all, I mean, he was a consummate professional. He, was very good also at the shuttle diplomacy to try and get everyone on board. I mean, it was no easy task in 2016 trying to get Russia to be part of the OPEC Plus alliance. What will he most be remembered for?
I think it's for those things that you've just talked about. His ability to successfully go about shuttle diplomacy and to kind of get coordination and all these diverse nations in the OPEC Plus alliance on board with each other. So, as I said, it's a very diverse set of nations. It's often very tense because they have competing policies and things when it comes to oil production. But he managed to do all that, to bring them together, and he was pretty much respected across the board, no matter whether it was with Saudi Arabia or Venezuela or who else. And I think that's what he'll be most remembered for. Yeah,
he understood the markets. He was very easy to talk to. I remember one pretty memorable moment where he actually called into Bloomberg TV's newsroom to be put on air because the markets got it wrong. So he was also a kind of, go-getter saying, like, I need to give this message to the markets because they didn't understand it. What does this mean for OPEC?
It is a big blow for the body and for also the wider oil community. I mean, this did happen very suddenly. As recently as yesterday, he was in Abuja, the Nigerian capital, meeting the country's president, and we didn't know of any illness that he had, so it's definitely a shock. He was coming to the end of his 6-year tenure, and he was about to be replaced anyway by Kuwait's Haitham al-Ghais. So in terms of the succession, I think that will be pretty straightforward. I don't know whether they will bring forward al-Ghais's succession or just keep to the original date of next month. But in that sense, it won't be too complicated.
Paul, in this kind of very difficult markets where there's a lot of volatility, yesterday we saw a huge swing in the price of oil. What's the role of a Secretary General of OPEC? Is it to coerce? Is it to encourage oil-producing nations to pump more? Or is it just to find some cohesion?
I think it's probably more the latter, to find some cohesion. I mean, ultimately what OPEC and OPEC Plus is about, according to Barkindo and other members of the group, is to create stability in oil markets. So what you saw yesterday, a roughly 10% drop, a collapse really in oil prices, is something that the group tries to avoid at all costs. It obviously gets blamed when prices run up as much as they have done in the past year, and people say that its members are just looking to make more money. But it does say that what it wants more than anything is a stable markets, and it doesn't want wild swings like what we saw yesterday.
Paul, thank you so much. Paul Wallace there, of course, who leads our energy and commodities coverage in the Middle East and North Africa. Coming up, the UK Prime Minister Boris Johnson fights for his political survival as his scandal-plagued government is rocked by the resignations of Chancellor Rishi Sunak and the Health Secretary Sajid Javid. More on our top story throughout the program. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. The US is said to be pushing the Netherlands to ban ASML from selling essential chip-making gear in China. It's an expansion of Washington's campaign to curb China's rise in chip production. The proposed restriction would widen an existing moratorium on sales of advanced chip-making gear to China. The Dutch firm is a leading maker of equipment for producing chips. Now, Boris Johnson is digging in as the UK Prime Minister. Despite the resignation of two senior cabinet ministers, Johnson has publicly apologised for promoting a government official while knowing the MP faced sexual misconduct allegations. Chancellor of the Exchequer, Rishi Sunak, left saying, quote, "We cannot continue like this." Health Secretary Sajid Javid also resigned yesterday. Johnson has appointed Nadeem Zahawi as as the new chancellor to replace Rishi Sunak. The US says Iran's rejection of a plan to return to the 2050 nuclear accord indicates it is not serious about negotiations. US State Department spokesman Ned Price describes Iran's demands as extraneous. Iran wants the US to remove the Islamic Revolutionary Guard from its list of terrorist groups. Progress towards a deal stalled back in March. Donald Trump exited the deal back in 2018. Now Shanghai is delaying the reopening of karaoke bars after one violated government COVID prevention orders. The Chinese city is carrying out mass COVID testing, covering half of the city through Thursday, following an uptick in cases. A rise in infections once again throws the government's zero COVID policy under the spotlight. Police have charged a man with 7 counts of murder over the mass shooting at an Independence Day parade in suburban Chicago. Officers say the 21-year-old legally bought 5 weapons, including 2 high-powered rifles, despite authorities being called to his home twice for threats of violence and suicide. Along with the 7 killed, 30 other people were wounded in that attack. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, turmoil at number 10. We, of course, delve deeper into UK politics. This is Bloomberg. Boris clings on. The embattled UK Prime Minister names Nadhim Zahawi as his new chancellor after Rishi Sunak resigns. We're live at Downing Street. Now, huge swings in markets. The euro tumbles to a 20-year low. Oil steadies around $100 a barrel after yesterday's 8% plunge. Plus, chipping away, the White House is set to pressure chip equipment maker ASML to cut sales to China as it looks to curb Beijing's rise. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Boris Johnson clinging to power after appointing Nadhim Zahawi as his new chancellor and Steve Barclay to the health portfolio in the wake of resignations by Rishi Sunak and Sajid Javid. Now, the pressure continues with the Prime Minister facing a grueling session in the House of Commons today. Well, Bloomberg's Lizzie Burden is at Downing Street. Lizzie, it's been described, of course, as a pretty dramatic day. That was yesterday, and it went all the way through the night. How many more resignations could we expect today?
Well, this is the question, and our Alex Wickham, Bloomberg reporter, has reported that there is potentially a plot between cabinet ministers to coordinated plot on putting Boris Johnson on red alert. And if 6 or 8 of his cabinet quit, that would leave Johnson struggling to form even a cabinet. So we are watching to see the movements of cars coming to and from Downing Street to see if any other ministers tend to resign. At the moment, apart from Javid and Sunak, it has been lots more junior ministers, but of course that's an indication that the tide is turning on Boris Johnson. It doesn't seem like he's going to resign, but that is one way that will put another massive amount of pressure on him.
So, Lizzie, what happens now? Is it a vote of confidence that could push the Prime Minister out? Is it someone that whispers in his ear, look, this is untenable, they're losing power, and it's time to go?
Well, it's a question of process on the confidence vote, because Johnson has just won a confidence vote, of course. Well, he scraped through it. But the current rules mean that there can't be another one for a year. But there are going to be elections next week to this Conservative backbencher committee, and they could change the rules to reduce that leeway period from a year. However, the arguments against that would be it would create headaches for future prime ministers who are trying to get on with the business of government. Is there someone who could replace Boris Johnson and win a general election? Ministers might be looking around and thinking that there isn't a viable replacement. And there's also the question of whether whoever takes over would have the mandate that Boris Johnson has, having won that 2019 general election. Those are the arguments, at least, that the remaining cabinet are putting forward on the airwaves today.
So, Lizzie, what do we know about the new chancellor? I mean, given the political fortune of Boris Johnson, we'll see whether he stays in his job for very long. But what's his thinking, for example, on taxes? Is he going to be more aggressive with cuts than his predecessor?
Well, his predecessor, Rishi Sunak, in his resignation letter also took a swipe at Boris Johnson on their approaches to the post-COVID recovery. He said if it's too good to be true, it probably is. Sunak was finding it difficult to align with Johnson in the speech on the economy next week. Well, Nadhim Zahawi seems to be more on board with Boris Johnson's boosterism. He's been on the radio this morning talking about how nothing is off the table when it comes to tax cuts. Potentially, he would be willing to scrap the corporation tax rise that had been on the cards. Utilities analysts are saying that maybe the windfall tax rise on energy companies could be scrapped. But all of this is going to cost, it's going to require more borrowing. And it changes the game for the Bank of England, really, because much more loose fiscal policy will have inflationary impact. And that may mean that the Bank of England needs to change its course.
Thank you so much, Lizzie Burden there outside number 10. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. S&P Global Ratings has placed Uniper's credit rating on negative watch after the German utility lost a big chunk of its natural gas supplies from Russia. Uniper, Germany's top buyer of Russian gas, is being forced to spend $30 million a day to buy fuel on the spot market after Gazprom reduced deliveries. The Handelsblatt newspaper reports that the German state may get up to a 25% stake in Uniper as part of a rescue package currently being discussed. A Bloomberg source says Tiger Global Management hedge fund gained 3.4% in June, pairing its decline for the year to 50.1%. The hedge fund is on pace for its worst year on record after some of its biggest equity bets plunged and it was forced to mark down some venture capital investments. June was the first month in 2022 that it actually made money. Sources say Broadcom's $61 billion deal with VMware will move forward after a rival bidder failed to emerge during a so-called go shop period. VMware had 40 days to solicit rival offers, ending at midnight on Tuesday. Go shoppers are rare in big deals like this, but the clause helped Broadcom secure the original merger agreement. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Leanne Gerrans here in London. Now, following 2021's unprecedented year of deal-making, M&A volumes fell sharply in the first half of 2022. Now, they were still well ahead of averages for the last 10 years. Now, JP Morgan sees global volumes remaining elevated, with activist investors being exceptionally busy behind the scenes. Well, I'm delighted now to be joined by Dwayne Lysite. He's co-head of EMEA M&A at JP Morgan. Dwayne, thank you so much for joining us. I mean, there's so much going on. I don't know whether you're sitting as the chief executive, you call your banker at JP Morgan and say, oh, I'm not sure about the timing now for, MA. I'm going to cool off to see how this recessionary environment settles.
Francine, thank you very much for having me on. It's been an interesting first half.
I like that.
Two ways about it. I think we put it on the relative scale. Yeah. When you look at it over a 10-year or a 5-year period, actually it's a relatively healthy story. Yeah. So EMEA M&A is actually up 8% compared to a 5-year average. A global M&A up 16%. So last year was an anomaly. A great anomaly and one of dreams for bankers like myself. Now, to your question, what about when the CEO calls? I think the focus is on strategic deals where there's a synergy opportunity. And I think actually when we talk to clients, they are keen to push ahead, despite what are headwinds, no doubt.
But what are they concerned about? Valuation? Because if you see at the price of oil, I mean, one day it's like 120, the other one it's like 99. It's difficult to know what the price of things are.
Yeah, and I think that uncertainty doesn't help M&A. We all know that. But I think we are going to get a levelling out in the valuations, in the public valuations. Private valuations rely on that, but they will settle too. And I think people will naturally look over a period of time and say, I'm comfortable, it's settled, or I can see value where maybe other people don't. So from that perspective, we are starting to see that settling come through. But we've got an earnings window coming through now in July, August, September. So that will further see maybe a little bit of disruption, but on from there we hope it provides a base.
So, Dwayne, are there sectors that actually are doing better than others in terms of finding good partners with there are good M&A, good synergies and bad ones, and finding the good ones?
Well, if you look at the first half, now it's only a short period, but real estate had a fantastic first half, up 80-odd%. Tech, however, had a difficult one, and we saw the tech sell off in January, February. probably greater disruption on valuations, much to your point. So overall volumes down 60-odd% compared to this time last year. Long run average, probably only down about 20%. So your point is absolutely right, but again, it's going to settle in, and people will focus on the strategic agendas, which don't fundamentally change. And we see a lot of other ways that M&A happens. You mentioned the activist point. You know, people are getting ahead of. Well, it is rife. You know, it's made that sort of successful trip across the Atlantic. It is in the major economies, UK, Germany, France, etc. And a lot of it is behind closed doors. We don't see probably 50% of it. Our sense is, and a lot of clients we speak to, they want to get ahead of that. Okay. They want to do the deals before the activists force them into that position.
Dwayne, talk to me a little bit about funding. So after 10 years, 15 years actually of cheap monetary policy, we're now looking at this very uneasy normalization with inflation really being rampant. Is that a worry for how some of these deals are funded?
Listen, I think it is slowing it down. No two ways about it. Pricing, it's more expensive. The capacity is less. But we're going through, I suppose, a transitory period whereby it will settle, it'll correct itself, but you can't get away from a rising rates environment and an inflationary environment. So we're going to have to see, how does it affect deals? One, we see more share-for-share deals, and we saw that with the DSM from Minitech transaction. We will see more of those. We'll see private equity, who have been tremendously busy. They were 40-odd% of M&A in the first quarter of this year. We'll see them probably over-equitizing.
Yeah, but private equity is a funny one because they've been doing deals but then sitting on them. So it's really changed the dynamic in these private markets because they've held on to companies. So does that change in the future?
I don't think it does. I think you're seeing an extension of the time they will hold their companies. We're seeing more infra-orientated type of transactions where it might be a 10, 12-year period. But the activity levels there, we think, will continue. They may be slightly more abated over the coming months, maybe into the new year, but PE is very much here to stay, and you're getting that balance between public and private.
Inflation, what does that mean for companies that actually cannot pass on some of the increases that they're feeling from inflation onto their customers? Is it more likely that they merge?
I think they will look for opportunities to seek out costs, greater control over the supply chain, so you can control prices through the supply chain. And as you say, scale is going to be a focus for people as they seek out opportunities to be bigger in new economies and to find savings to fight that inflation factor.
How's the UK specifically? I mean, this is like a microcosm, it feels like, of all the problems in the world kind of coming out of confluence and exacerbated because it's a small open economy.
So M&A-wise, taking it to my world, it's had a hard first half, down 44%, as you know. But when you look at the amount, 183 billion of M&A, that's twice the other largest market. So it remains very much at the front, and it always has been probably the most open M&A market outside of the US. So there are headwinds. We have seen, obviously, the news overnight, and that goes to confidence factor. But fundamentally, we see the UK still pushing ahead. We will see some large transactions, no doubt, before the year end, there's more to come.
I mean, quickly, we had these interesting 6 months. If there's a gas embargo, or are people waiting to understand better what Vladimir Putin's thinking is? Like, do you actually speak to clients who say, oh, I don't know what to do about Russia, and when that settles, then I'll move into buying another company? Or is it kind of now, at the back of their mind?
I think it's increasingly moving to the back of their mind. I think we're going to deal over the coming months with the new norm and people deciding, I have to get on with it. I've got a strategic agenda. I've got shareholders to look after, and I've got employees and boards.
Dwayne, thank you so much for joining us. Dwayne Leinz.
Thank you for having me.
Co-head of EMEA M&A at JP Morgan. Now, coming up, we'll be joined by a Tory party donor, but also, of course, huge in the travel industry, Sir Rocco Forte, an early supporter of the Prime Minister Boris Johnson. Will get his view on UK politics and on the leisure sector. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Sir Rocco Forte, founder and chairman of the UK's Rocco Forte Hotels Group, supported Prime Minister Boris Johnson from the start. He hosted a party for Conservative Party staff in one of his hotels to celebrate Johnson's victory in the Tory leadership contest and donated £100,000 to his election campaign. But the hotelier's support for the Prime Minister has since dwindled due to the government's approach to business, tax and regulations. Sir Rocco Forte joins us now. Sir Rocco, first of all, this was also a conversation on inflation and the hotel business, but we've kind of pivoted because you're such a well-known face of and supporter of the Tory party. So we'll talk a bit about that, and then I want to talk about staffing issues and, of course, inflation. What's happening to the Tory party in this country?
I mean, that's a long story, I suppose. But I mean, the reality is, Boris Johnson was supported because people thought he could deliver Brexit, which he did. The thing was a complete mess until he came along and he managed to sort it out, and that he'd win an election. He did both those things. After that, we expected him to get a good team around him, as he did when he was mayor of London, and then drive the country forward. But the main thrust of, I mean, as a Conservative supporter, I want to see a government that supports enterprise and business, because that's the way you grow the economy.
So, do you think he can stay on as Prime Minister now, given what's happened?
Well, that's not really for me. It's for the Conservative Party. I mean, I think this thing is so silly, because if he'd said at the beginning, I made a mistake, and I've appointed lots of people in my life when I made the wrong choice, but then you deal with it. He didn't say that. He prevaricated. And
what do you think the new Chancellor will do?
What do you think?
The new Chancellor will do. So it does seem that
I hope he won't be captured by the Treasury like Rishi Sunak was. The Treasury seems to have this view that we've got to repay the COVID debt immediately, instead of taking a much longer-term view of the economy. If you grow the economy, the debt shrinks as a percentage of GDP and comes down to more acceptable levels. Taxation policy has got to take a long-term view over government expenditure, not balance everything every day as you go along.
But so we think that actually this Chancellor will be giving faster tax cuts than predecessor, which is what the Tory used to do in the past. Would you welcome it, or do you worry about it fueling inflation? I mean, at the end of the day, you're also dealing with inflation as a hotelier.
But at the moment, you have several things which are slowing the economy. You have this sort of huge commodity price rises, which are putting a damper on the economy. You have fiscal monetary tightening. The Bank of England's raising interest rates, stock quantitative easing. At the same time, you have fiscal tightening. You completely destroy the economy. So there's got to be a balance.
But is that the price to pay? Does the Prime Minister, does the Bank of England have to almost put us in a recession to deal with this inflationary, which must be a headache?
Because I think part of this inflation is temporary. It's not. It's supply chain issues, and also the war, which is driving up energy prices and food prices to a level which is not normal and won't be sustained once things normalise.
I want to talk about travel, but is there anyone that you would like to see the next Prime Minister if Boris Johnson were to go?
No, it's very difficult. I think probably if it was obvious who it would be, things that have already changed. I think.
Why so difficult? I mean, is it a Boris Johnson loyalist that needs to be next Prime Minister, or someone that's not a loyalist?
There's someone that's what?
Not a loyalist to Johnson.
Well, I think you need someone who you feel is going to take the Conservative Party in the place it should be, and someone who has the strength and power and ability to communicate as well and win an election. And that balance I think is difficult to see in the present front bench at the moment.
So all of the newsroom was talking, of course, about travel, holiday, how do we get to where we need to be because of this huge travel chaos. You have, of course, a lot of the most beautiful luxury properties around Europe and the world. How is it for you? How difficult is it to find the staff to make sure that some of your customers are there given all the travel disruptions?
Well, I mean, we've had 2 years of hell in the industry, and now suddenly there's a boom. There's huge demand. Since April, we've seen very, very strong demand across the board, and our hotels are performing at record levels as a result. the staffing issues are there. And not just in this country, the same in Italy and the same in Germany. Funnily enough, the worst place of all is Germany.
Because you have to pay them more?
Well, you have, there's an element of that, but the people are not in the marketplace. There's sort of people who seem to have disappeared from the marketplace, and people don't want to work anymore. We didn't, you know, we kept most of our staff during COVID. Yeah. As a result, we're not suffering as much as some people, but and we're coping quite well with the levels of business. It means some staff have to do overtime and extra hours.
So, Rocco, how much of inflation is actually hurting your costs, and how easy is it to pass it on to the customers because you're at that very high end?
Well, I mean, you don't, room pricing is very dynamic these days. You have revenue management. And so our average room rates have increased hugely over the last 4 months compared to 2019. And there's much as 35% ahead of 2019. That's a combination of factors, the type of rooms people are buying. People are buying much more suites and better rooms.
And do they stay for longer? I mean, we were looking, at the Hotel de Russie in Rome.
Yeah,
you're fully booked
the city
for
centre
6
hotels
months.
are not particularly staying for longer, but in resorts they tend to move around less. They stay a week, 10 days on average, rather than 4 or 5.
So Rocco, do you think COVID has changed the way we travel? Do we, fly EasyJet but then want to stay in a Rocco Forte hotel?
Well, I think people take. My experience is that I take whatever flights are available if to get myself to the place I'm going to in time. Quite a lot of people actually can afford to take private flights, and there's been a huge increase in that, a huge boom in that, in fact.
So Rocco, thank you so much for joining us. A conversation on travel and the Tory party. What a great day to have you on TV. So Rocco Forte, their chairman and founder of Rocco Forte Hotels. Coming up, market sentiment remains a bit fragile. There are growing concerns of a global economic slowdown. We dive deeper into the markets next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Straight to the markets, because yesterday we had a pretty wild swing, certainly when it comes to currencies. Today, again, there's a bit less of a swing when it comes to equities, but actually bonds fluctuating quite a lot. Now, bargain hunters chasing technology stocks, boosted, for example, by some of the U.S. equity gauges yesterday. It did only help to mask a deepening slump in some of these stocks, for example, linked to economic activity, such as energy, commodity, and industrial names. We also saw overnight a renewed spike in China's COVID cases and a worsening gas crisis in Europe, and that seems to be signaling that there's a worldwide slowdown coming, even as central banks tighten monetary policy to contain consumer prices. If you look at some of the currency swings, it's amazing to see euro dollar close to parity at 102.46 without really the rest of the markets really batting an eyelid. And you can see the FTSE, one of the biggest gainers, despite the political turmoil in this country, gaining some 1.4%. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, Anna Edwards here in London, and this is Bloomberg.
So basically, we're in a race here, right, between inflation peaking and rolling over and us sort of going into recession.
The market seems to want to center on the idea that growth is slowing.
Recession is inevitable, but I don't think that it's imminent.
I really do think recession, or at least a mild one, is actually priced in.
It feels like we're in a recession. I think Europe is going into recession. I think the UK is in recession. And I think it's an open debate in terms of the US.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Welcome to Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York and Anna Edwards in London. The gang's all back together. Here are our top stories for today. Recession signals haunt investors with the yield curve now firmly inverted. Still, oil bounced back above $100 after plunging down below it yesterday. British Prime Minister Boris Johnson fights to stay in office. Two top ministers quit in the wake of the latest scandal. And we are watching very closely to see what happens in terms of crypto. With yet another failure, Voyager Digital files for bankruptcy protection. So a lot going on, Kailey, in geopolitics, in markets, and in crypto as well. What are you seeing right now in terms of the Asian session?
Well, broadly, it was risk off. You had stocks down across the board in Japan, Hong Kong, and China, all that together taking the MSCI Asia Pacific Index down by about 0.9%. And in that classic kind of risk off play, you saw a bit into haven assets like the Japanese yen, which is an outperformer, not just in Asian FX, but G10 FX as well. Stronger against the dollar by about 0.5%, trading right around that 135.21 level. And you're also seeing a bid coming into the bond market, yields moving lower in places like New Zealand and Australia, where the 10-year yield actually came in 14 basis points and at around 3.4%. That is the lowest we have seen since the end of May. Finally, I would note you're seeing prices coming down across a lot of the commodity complex. That includes palm oil, with futures down another 7% or so overnight. They're actually now at the lowest since September, down some 40% from the peak in April. And as we are seeing Indonesia bringing more supply onto the market, that is weighing on prices. And when you combine that with the fact that wheat, for example, is also coming down, that's easing some concern out there about food inflation in particular, Anna.
Yeah, really interesting to see the dynamics that led to metals prices being weaker in the second quarter, Kailey, catching up with other parts of commodities. This is what we see on the European equity markets, though, right now. The map tells a fairly positive story. We're up on the stock 600, up by 1.2%, and nearly all sectors in positive territory. Interestingly, it's some heavyweight sectors like the banking sector and the energy sector that are underperforming. That after we saw real weakness coming through in oil prices yesterday, even if they recover some poise at 104 on Brent today. I'll show you what's going on with UK assets. We've had a lot going on, understatement of the year, in terms of UK politics, and that continues to be the case. UK two-year yields are on the rise. The pound making some very modest gains, but all of this has very little to do with the politics, we're told. Other things seem to be in the driving seat. What we have heard is some slightly at the margin hawkish commentary coming through from Bank of England officials. Certainly Hugh Pill and Cunliffe both continuing to emphasise the need for more rate hikes. Hugh Pill in particular just saying, I think we probably need to tighten further in the last few minutes. Natural gas prices in focus here in Europe, but not for the reasons that they usually are. We've actually seen a big drop here. This is at the margin, a better story around inflation, of course. Natural gas prices higher because of geopolitics, also higher because of strike action in Norway. It is the latter of those that has ebbed away. And so with reduced threats of strikes in Norway, we see some room for natural gas prices to come down. And ASML, this is the company that makes the machines that make chips. And this business has been lent on it, we understand, by the US government to do less business in China. That led to selling at the ADR yesterday. But despite all of that news flow, ASML share price, though, is actually up in session today.
All right, that's a story we're following very closely, Anna. In terms of U.S. futures, we are down right now on recession concerns. As I said, that 2's 10s curve is firmly inverted. Now we're watching the 3-month 10-year, which is what Jay Powell watches as well. You see the 10-year yield right now coming down to 280 as investors buy that debt, and the 2-year is yielding 281 and change right now. NYMEX crude had dropped down below $100 a barrel yesterday. It is bouncing back a little bit today, up at 91 cents to $100.40. So it doesn't seem that crude has been affected today by recession concerns, but maybe that's just a little bit of a bounce from the drop that we saw yesterday. And Bitcoin down 1 2/3% from midnight. Always important to remember, this price is from midnight, and it's ran fairly arbitrary. I was going to say random, but it's not random. We picked it. But of course, Bitcoin trades 24/7, so you could pick any time of day to measure the change. In any case, it's higher than it was at this time yesterday at $20,102. Kailey?
All right, Matt. Well, obviously, there's already a lot going on this morning, and there is more in the day ahead, starting with UK Prime Minister Boris Johnson facing scrutiny by lawmakers at his regular Q&A session in the House of Commons. And later in the day, he will be taking questions from senior MPs on Parliament's liaison committee. My guess is it's going to be pretty brutal for the Prime Minister. Then President Biden will be traveling to Cleveland, Ohio, the great state of Ohio, as Matt Miller would call it, where he will give remarks on his economic agenda and building the economy. And finally, 2 p.m. Eastern time, we'll be getting the Fed minutes from the June meeting. Matt, what clues will it give as to how policymakers are thinking about going 50 or 75 this month?
All right, thank you very much for the Ohio shout out. Right back at you, Miss Virginia. Let's get now to what's going on in the UK. Boris Johnson, as Prime Minister, really fighting for his political survival this morning. His government has been rocked by the resignations of Chancellor Rishi Sunak and Health Secretary Sajid Javid. Both quit over revelations that Johnson lied about the extent of his knowledge of misconduct allegations facing a newly appointed cabinet ally.
It was a mistake, and I apologise for it. I think in hindsight, it was the wrong thing to do. I apologise to everybody who's been badly affected by it, and I just want to make absolutely clear that there's no place in this government for anybody who is predatory or who abuses their position of power.
For more, we're joined from Downing Street by Bloomberg UK reporter Lizzie Burden. Lizzie, it's been described as the biggest day of drama in Westminster since the fall of Margaret Thatcher. Talk us through what happened last night.
Well, Matt, on Downing Street, we're watching the comings and goings of ministers in case any more resign, because last night, Rishi Sunak, the Chancellor, and the Health Secretary Sajid Javid handed in their notice. They said that the handling of the Chris Pincher affair, as you mentioned, was too much for them to bear. Their resignation letters focused on integrity, but they were quickly replaced with Nadeem Zahawi for Chancellor, Steve Barclay for Health, but more junior resignations just keep on coming, even as we speak. Bloomberg's Alex Wickham reports this morning that Boris Johnson's on red alert for signs of a coordinated plot from his ministers to bring him down. If 6 or 8 of his cabinet quit, that would leave him struggling even to form a cabinet. But the next immediate hurdle will be Prime Minister's questions this afternoon, where he faces opposition leader Keir Starmer. Then he'll have a grilling at the Parliamentary Liaison Committee. That's the heads of the various select committees. But it doesn't look like Boris Johnson's going to voluntarily resign. The newspapers this morning saying that he's on the brink, but also referring to his moniker, the greased piglet. But the other way that he could go is if the 1922 committee of Tory backbenchers changes its rules, reduces the one-year grace period that he currently has after that confidence vote that he narrowly won, and to mean that Johnson faces another vote.
Yeah, we've seen 13 resignations by my last count in the last 24 hours then from his team, either ministers or ministerial aides then, Lizzie. But key amongst these, of course, is the departure of a chancellor and the reappointment or the appointment of a new chancellor. What does the appointment of Nadeem Zahawi, what does that mean for the UK economy? Do we know yet?
Well, of course, this is happening in the middle of a cost of living crisis. Inflation in the UK is set to hit double digits in the autumn, in the fall. And Sunak's resignation letter highlighted his differences from Johnson on fiscal policy. He said if it seems too good to be true, it probably is. Well, Nadeem Zahawi seems to be more aligned on fiscal policy with Boris Johnson's boosterism. He's been on the radio this morning saying that he's determined to do more on tax cuts. Nothing is off the table. Utilities analysts are saying that could include the windfall tax on energy companies. Perhaps that will be reversed. Perhaps the corporation tax rise that was planned will be reversed, but this will have implications for the Bank of England. Much looser fiscal policy will have inflationary effects. You've already heard from the chief economist of the Bank of England, Hugh Pill. Earlier, that's the Defence Secretary, Ben Wallace, not responding to questions as if he's going to resign. But in terms of monetary policy, the Bank of England may even go for half-point hikes if fiscal policy gets that loose.
All right, Bloomberg's Lizzie Birding reporting from Downing Street, where live action is taking place. Thank you so much. Now, from UK politics to U.S. and really geopolitics, the U.S. wants to talk candidly with China. According to a top official, Secretary of State Antony Blinken will have a discussion about the war in Ukraine with his Chinese counterpart Wang Yi later on. Anne-Marie Horder, Bloomberg Washington correspondent, has the latest from D.C. So, Anne-Marie, what message will Blinken be trying to convey?
Well, the U.S. really wants to make it clear to China what the Washington's expectations are when it comes to how China deals with Russia and views Russia's invasion of Ukraine. This meeting is very interesting because these two individuals, Blinken and his foreign minister counterpart from China, have not met since October. And of course, since October, a lot has happened, including China and Russia declaring that their friendship has no limits. Also, it comes after a pretty sharp criticism over the weekend from the U.S. ambassador to China, Nicholas Burns, saying that China is spreading Russia propaganda, calling this lies. So it's going to be a pretty frank and direct conversation, according to what the U.S., how the U.S. views it. We should also note at this G20 meeting, there's going to be another individual there that Secretary Blinken will not be sitting down with. And no surprise there, that's Russia's foreign minister, Sergei Lavrov.
You know, it's interesting, Anne-Marie, yesterday, J.P. Morgan, or over the weekend, J.P. Morgan came out with a report saying Moscow is in such a strong fiscal position they could pull all of their oil production off the international market if they wanted. Now we find that China and India have paid $24 billion to Putin buying energy since these sanctions started. Is the U.S. concerned at all about this?
They clearly are, because I just got back from the G7 leaders meeting in the Bavarian Alps, as well as NATO. And what you have coming out of the G7 is that all of these countries agreeing that they need to do something about Putin still being able to make this revenue, even though a number of countries, including the United States, Europe's trying to wind it down, are rejecting Russian fossil fuels. But Putin is still able to move all of those fossil fuels, now with sky-high prices, to countries like China and India. And what this customs data shows is that China spent about $19 billion in these 3 months ending in May. That's double of what they spent last year. India, about $5 billion. That's 5 times as much as what they spent last year, because China and India are able to call up steep discounts from Russia. But Russia is still making a ton of money, which is why they are trying to figure out a mechanism, this price cap, to make sure Russian crude stays on the market so they have some easing of inflationary concerns, but at a cap so that Putin cannot be making all of this profit from selling these fossil fuels.
All right, Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horder back on U.S. soil in Washington, D.C. Now, more crypto woes in the market. Voyager is the latest company in the sector to hit trouble, filing for Chapter 11 bankruptcy protection. Emily Nicole, Bloomberg crypto blogger, joins us now. Emily, how did we get here? You know, is this just one more domino in the chain?
Yeah, Voyager is definitely the latest one that seems to be struggling the most with the fallout of a major hedge fund in the crypto space, Three Arrows Capital. They had lent $670 million to Three Arrows, and they're still trying to recover those assets as Three Arrows itself goes through liquidation now in the British Virgin Islands. Voyager is saying it's going to be restructuring its company and some of its subsidiaries to try and make sure that they can recover customer funds, make sure everybody gets their money back. But some of those arrangements aren't even going to be the same way that the customer put their money in. Some people were holding crypto, they might get tokens from Voyager back, and not even the crypto they put in the first place. Others who had put in USD deposits are waiting to see whether or not those are still insured and will be coming back to them as well.
Okay, so that's what we're watching for. I mean, what's the fate of Voyager customers then in this context?
So they have about 100,000 creditors as listed on their filing, as we know at the moment. And the largest one of that is Alameda, a crypto research firm that is run by Sam Bankman-Fried, the founder of crypto exchange FTX. Alameda had extended a loan and some credit facilities, about $485 million to Voyager. And now they're trying to recover around $75 million of that back in a loan following this bankruptcy proceeding. And other than that, you know, we're seeing some lines like almost $1 million going to Google because of cloud costs at Voyager. And so, you know, for the little people anyway, it really is unsure what they'll get back.
All right, Bloomberg's Emily Nicole, thank you so much. And of course, be sure to catch Bloomberg Crypto every Tuesday at 1 p.m. New York time, 6 p.m. in London. Matt Miller and I break down all of the crypto news. Now, talking of crypto, let's get a look at some stocks moving in pre-market trading here in the U.S. because one of the big underperformers is Coinbase, the big cryptocurrency exchange. Really, this just is not a company that can catch a break. It's down 78% so far this year, down another 4% or so this morning. Another stock that is posting a relatively big decline is DoorDash, down about 5%. This isn't so much having to do with this company as it is having to do with one of its competitors, because Amazon, the news came overnight, has now gotten a deal to take as much up to a 15% stake in Grubhub, which is a competitor to DoorDash. Amazon apparently going to offer membership for those who have Prime membership, so that's weighing on DoorDash this morning. One more positive story out there, though, is Rocket, of course, the mortgage company. It was raised to overweight at Wells Fargo, $10 price target on the stock, which would be a 24% increase from yesterday's close. Right now, that stock up the better part of 3% in early hours, trading around $8.28 a share. Anna.
Coming up on the program then, Kailey, we'll talk to Priya Misra, TD Securities Global Head of Rates Strategy. We will talk curve inversion. We'll also talk about what is in store for stocks if we see rates hover around these levels. And Johnson clings on more on the UK political drama with Liberal Democrats Member of Parliament Christine Jardine. That conversation coming up. Plus, forget the recession debate on Wall Street. For many households and businesses, the downturn is already here. Read more in today's Big Take story on Bloomberg.com or by typing NI Big Take into your terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London. I'm looking at the league table right now and just checking out high-yield debt issuance over the past 11 years. We've never seen it this low at this point in the year. By the way, if you want to check out this function, just type LEAG GO on your Bloomberg terminal. Dana El-Baltaji joins us right now, Bloomberg Managing Editor for Credit. And Dana, it looks like the credit market is frozen right here. What does that mean for markets?
By the way, that's a fantastic chart, and it really goes to show just how painful it's been for high-yield issuers globally this year. The market is essentially closed to anyone that's looking for a good deal. At this point, the only way to access the market is to accept the fact that you have to pay a lot more for cash than you're used to. And a lot of issuers just aren't willing to accept that just yet.
OK, yeah, all credit to our colleague Dan Curtis for putting together that, or for drawing out, reminding us of that function to use on this particular point. Let's pivot to UK assets, because we've seen a lot of UK politics making headlines, at least, Dana, this morning, well, last night and this morning. Is it sticking to UK assets, though? The verdict seems to be this isn't enough to offset the driving force, which seems to be monetary policy.
So, you know, we woke up this morning thinking that there might be some reaction in UK markets, but we've spent the entire morning we've spent the entire morning speaking to people, and the basic feeling is they don't quite know what's coming next. And that actually is worse than an immediate action, because this basically means there is uncertainty over what will come. And that kind of uncertainty is bad news for a market that's already facing the sort of risks that the UK market is facing.
OK, Dana, thank you very much. Bloomberg's Dana El-Baltaji, thank you very much for your time this morning. And for more market analysis, check out MLI Vigo on the Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The suspect in the shooting at an Independence Day parade outside Chicago has been charged with 7 counts of murder. Dozens more charges are expected. Local officials say the 21-year-old man had probably planned the attack for weeks. He used a rifle that was said to have been purchased legally. 7 Trump allies, including Rudy Giuliani and Senator Lindsey Graham, have been called to testify before a grand jury in Atlanta investigating attempts to overturn the 2020 election. In the weeks after the election, Donald Trump contacted Georgia's governor and Secretary of State, urging them to find enough votes to change the results in his favor. Giuliani claimed to have identified fraud involving election workers. In China, the COVID-0 strategy is being tested again. A jump in infections across Shanghai is raising the prospect of another lockdown. The city reported 24 infections today, the most in 3 weeks. Meanwhile, a highly infectious variant of the virus has begun spreading in China for the first time. And the price of oil has steadied at around $100 a barrel after plunging Tuesday. Goldman Sachs says that drop is driven by fears of a recession and was overdone. Meanwhile, the outlook for energy consumption in China is improving. And the Secretary General of OPEC has died. Mohammed Barkindo was in the final weeks of his 6-year tenure as the head of the oil cartel when he died in his native Nigeria. Barkindo oversaw one of the most turbulent periods in OPEC's history, beginning with the creation of the OPEC Plus coalition in 2016. Mohammed Barkindo was 63.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Recession signals haunt investors with the yield curve firmly inverted. Still, oil bounced back above $100 after plunging below yesterday. British Prime Minister Boris Johnson fights to stay in office. 2 top ministers quit in the wake of the latest scandal. Johnson said to be on alert for signs of a plot from other cabinet members to bring him down. And more victims from the crypto crash. Broker Voyager Digital files for bankruptcy protection. The firm cites market volatility and the collapse of a hedge fund it had lent money to. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And Matt, European equity markets down more than 2% for most of them in yesterday's session. Up today around 1.4%, finding it within themselves somehow to claw back some gains.
Yeah, a little bit of a bounce after really the recession fears, I think, were yesterday. Today we have the real inversion, and we're going to talk to Priya Misra about that in a second. But we do have futures down 0.1% here. The S&P futures down to 38.29. The 10-year yield unchanged. Right now at 280.72, but I just went back and looked. The 2 years at 283 and change. So seriously inverted, and we're watching 3 months, 10-year. I got to check that one. That's the one that Jay Powell watches. NYMEX crude bouncing back from the plunge it saw yesterday. The oil calls were amazing yesterday because Citi said oil could go as low as 65 if we have a deep, prolonged recession. Meanwhile, JP Morgan said oil could go up to 380 if Russia pulls a few million barrels off the market. Bitcoin also down from midnight, but still higher than it was at this time yesterday and higher than it was during the crypto show yesterday at 1 p.m. at $20,185. It's really hovering around that level. I guess 20 is the new 30, Kailey.
Okay, Matt. Well, 20 is the new 30 actually probably sounds about right because we see Bitcoin continuously getting stuck in these ranges, holding there for a while, and then maybe breaking out, most of those breakouts being to the downside as of late. As for some stocks moving in pre-market trading, we talked about how oil was stabilizing a bit. That is lending some support to energy stocks in pre-market trading. The likes of Exxon and Diamondback each up in the ballpark of 0.5%. Moving lower, though, is Amazon, and this one's interesting. It's down about 0.4% after news overnight that it has sealed a deal to take up to a 15% stake in Just Eat Takeaway's Grubhub food delivery. Amazon planning to offer that membership free with Prime, and that in turn is weighing on one of Grubhub's competitors, DoorDash. It's down about 5.2% before the bell, and I know, Anna, that there's been a big move for Just Eat in the European session.
Yeah, absolutely. That one certainly in focus in connection with the same story then, Kailey. Let's get to the broader market. And we see European equity markets, as I was pointing out, moving higher. The Stoxx 600 up by 1.4%. Interesting to focus on UK assets because of what's been going on in UK politics. The top line seems to be that the politics is not sticking to UK assets just yet. If we saw a change of leadership, then that might change. If we saw a big change in policy, that might change. But we're not seeing those things just right now. And so the market's waiting for further direction. What we have heard is some fairly hawkish commentary. What once again really coming through from the Bank of England. And so that had been pushing those yields higher, even if we unwound that move a little bit later in the day. I've also put in here natural gas prices, because here in Europe, we focus so much on the run-up in those natural gas prices. Here in the UK, we've seen a big drop overnight in those natural gas benchmarks, and in Europe to some extent as well, only down 2.4%. They were down much more substantially, and this was because some of the threat of strike action in Norway had been removed from that sector. Kailey.
All right, Anna, well, let's turn back to the bond market. Joining us now is Priya Misra, head of global rate strategy at TD Securities. She is up early for us in the U.S. this morning. And Priya, we were talking on the commercial break. I always thank our guests in the U.S. for waking up so early. And you're like, who's sleeping anyway? With the behavior of this bond market, I do not envy you. We have a curve inverted. 10-year right around 280. The pricing of the Fed's terminal rate has come in substantially. How appropriate are any of those moves?
So I think we are moving from one narrative to another in a very fast fashion. I would add another headwind is the lack of liquidity, lack of conviction. I think that's why we're seeing extremely volatile moves. But when I sort of take a step back, I think we know growth is slowing. And it is the intent of Fed tightening. So I think we should be expecting growth slowing, but slowing to trend, slowing a little bit below trend. We still don't have recession in our base case, but it is something, it is a risk. And it's those probabilities keep rising as the Fed takes rates above neutral. We still have an inflation problem. And I think the market has gone from inflation fears to recession fears. But inflation tends to be persistent. It's an extremely broad-based inflation. So our thought is the Fed is going to have to keep going. So I do disagree a little bit with the market taking down that terminal rate significantly. I think 3.75-4 is much more likely than the 3.25 that the market's pricing in. So on your inversion point, I actually think the curve is going to invert a lot more, because we're going to get inflation next week. We're going to get payrolls later this week. The job market is still strong and inflation is high. So I think the Fed really cannot afford to stop. They're telling us they have an unconditional commitment to inflation. So I think that front end rates rise, the long end stays more anchored because of growth fears.
What does that exactly mean to you, Priya, unconditional commitment to tackle inflation? Because, yes, we understand that means inflation is very much the priority and they're going to keep putting up rates until it, in some senses, comes under control. But at what price to the economy? At what price will they tolerate, given that word, unconditional?
Exactly. So I actually took that unconditional word to mean it was a shift in the Fed reaction function. I think they're concerned about losing inflation credibility. One could argue they've already lost some of it. So they are prioritizing inflation. They need inflation to decline much closer to 2%, perhaps 3%, for them to really slow down. Now, they can slow down the pace of hikes. We expect 175, and then we expect a pace of 50 basis point hikes. But the calls for stopping after 75 or just 1 or 2 more hikes, I think they're extremely premature because of the unconditional commitment. I think we're used to the Fed responding to every slowdown in growth for the last 20 years. We haven't had an inflation problem, and we haven't had an inflation expectations problem, which is why I understand why risk assets are concerned and the curve is inverting, because I think the inflation may not give the Fed that flexibility to slow down. If it's high, they're telling us, we're not looking for a recession, but if it happens, it's outside our control. It's because we have this unconditional commitment.
Well, and there's a lot of talk, Priya, about there being a recession right now. The Atlanta Fed GDP forecast shows that we had 2 quarters of contraction, but of course that doesn't mean it's a recession. The NBER has to officially come out and label it. How much does it matter to you? How much does it matter to markets if we are in a recession, technically or not?
Right. So I think there's a lot of concern about a technical recession. I'm more concerned about the labor market. I mean, do we see the labor market remaining robust? 300, 200,000 payrolls. If those are the numbers, the unemployment rate stays here, I think it's not going to feel like a recession. And so we could have a technical recession. The first quarter negative number was all inventory driven. If the second quarter is also negative because of inventory, I don't think the Fed responds. The market's going to be concerned, because typically 2 quarters of negative growth results in an underperformance in the labor market, and we start to see the unemployment rate rise. I think that's what the Fed and really the market should be looking at, the labor market, more than these negative GDP numbers that could be driven entirely by inventories. Consumer spending is slowing, but it's not signaling recession just yet. We're more concerned about a recession next year, because by then the Fed takes Fed funds to 4% and QT continues. you get tighter financial conditions and inflation weighing on the consumer. But right now, you've got a strong labor market and you've got decent wage inflation. That, I think, buffers the consumer, at least for the next 6 months.
If I look at financial conditions, the Bloomberg has FCON Go, and of course, various banks have their own indicators. They're getting tighter and tighter, Priya, and we're seeing spreads getting wider. What are you watching for? What levels are important to you?
I think for the Fed response function, there's not a level that they care. I mean, they're telling us they want to tighten conditions, very different from the last few cycles where, it was about getting to neutral. Here, they're telling us they're going to go above neutral. So I think those conditions can get a lot worse, particularly if the growth slowdown is a little more than what I think is priced in. I would argue credit is pricing in some chance of a recession, but not 100% chance of a recession. Default risk has only just started to go up. So I am more concerned about credit spreads. I mean, equities, I think risk premium needs to come off. Do those earning estimates come off? But you asked about a level. Is there a level? I think there's a level for the economy that starts to hurt the economy. I think we're already there. But does it impact the Fed? I don't think they're going to respond to this. They really need those inflation numbers to go down, particularly core headline as well. I mean, they told us they care about headline, which is a little surprising because I don't think the Fed can control much of headline inflation.
Yeah.
But I would look at core, shelter, service inflation. These are things that the Fed does control. Are those starting to come off?
Well, Priya, of course, it's not just the Fed that's worried about inflation. In the UK, they have a serious inflation problem at the same time that they're also worried about a growth slowdown. We've talked a lot about what the implications mean for monetary policy and the BOE, but in light of the shakeup we've seen in the UK cabinet of a new chancellor coming in and the fiscal equation possibly changing, I'm wondering how all of that shapes your view on gilts.
Right. So, we generally think gilts and bunds should outperform global rates. Particularly the US. But specifically, since you asked about gilts, I would say the front end. So if we do get easing of fiscal policy, I actually think it allows the Bank of England to continue to hike. So I don't like owning the front end of the gilt market. The long end, I think, is more attractive because you get fiscal easing, the Bank of England can hike some more, but then it is going to slow growth. And we've got the inflation problem. I think inflation itself starts to slow growth, already there. So I think long end gilts can be very anchored, maybe a buying opportunity. The front end, and I think the market doesn't know how to price in fiscal versus monetary. Well, fiscal easing will allow the Bank of England to keep going because every central bank now is dealing with this dual issue of I don't want to use the word stagflation, but essentially we are seeing slowing growth and high inflation, and any help from the war getting resolved or commodity prices falling or fiscal easing will allow central banks to focus more on inflation.
Okay. We will see then if we get further commentary around tax cuts from the new Chancellor here in the UK, Priya Misra. Thank you very much, of TD Securities. Thank you so much for joining us this morning. Sticking with the UK, coming up on the programme, Boris Johnson clings on. More on the UK political drama with Liberal Democrat MP Christine Jardine. What does the path ahead for UK politics look like to her? This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Bain Capital Public Equity Co-Chairman Steve Pagluccia. That's at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. So the UK Prime Minister Boris Johnson's government has been rocked by the resignations of Chancellor Rishi Sunak and Health Secretary Sajid Javid. Joining us now for more is Christine Jardine, UK Liberal Democrat MP and Treasury spokesperson for her party. Christine, really good to have you with us. For the global audience, of course, the Liberal Democrats, the fourth largest party in Westminster. And you speak on matters to do with the Treasury for your party. So interesting to get your insight as to the challenges facing the new Chancellor, who's Nadhim Zahawi. What do you think his priority should be? We've heard from him this morning about tax cuts, growth, and around tackling inflation. What should his priority be?
Well, his priority should be exactly the same as Rishi Sunak's priorities, which should have been, is to reverse the corporation tax rise, to get help to the families who desperately need proper support to get by day to day, to put food on the table, petrol in their cars. And the Conservatives have seemed too preoccupied for too long with propping up a failing leader. And either they don't care or they just don't get the issues that are facing the people in this country, which is why they have lost so many by-elections in the last year.
That's interesting. So you think that more fiscal generosity will, boost the Tories' chances when we come to the next election? Is that what people are really complaining about the Tories in regard to? Or is this just going back to all the scandals around Partygate and the like?
Oh, I think it's a combination. And, you know, I'm not concerned with boosting the Conservatives' chances at the next election. I'm concerned with what is good for this country, and what is not good for this country is this government. We have seen the mismanagement of the economy. We've gone from being one of the best performing economies in the G7 to 19th in the G20. I mean, only the Russians now their economy is struggling more than ours. They have mismanaged crisis after crisis. And Partygate we saw was scandalous. This government, you know, with a Cronygate, this, you know, mired in sleaze and you know, bad judgment. So that is what I'm concerned about, is replacing them with, you know, a government which actually is in touch with what the country needs and does something positive to get us out of the economic mess and the cost of living crisis and the inflation that we're facing at the moment.
I mean, there is a global dynamic to all of this, though, Christine, as we know, inflation certainly an issue in many other parts of the world. What would you do then to bring it down? Because rate hikes seem to be what the central bank is left to do. What should the government be doing?
Well, I completely acknowledge the fact that we have a global crisis, but it's about how you manage it in this country, and they haven't managed it well. And the first thing we suggested back in October last year was a windfall tax on the extra profits, the unexpected profits of oil and gas companies because of the global surge in energy prices. And, you know, government had to be dragged kicking and screaming to the table before doing that in May. And several months were lost when families
Is
could have
that
been
really
helped
fair business?
With that cash. Yes, it is.
Well, let me ask you this. If they have losses that are bigger than usual during difficult times, will you give them money?
Look, I believe in free enterprise and I believe in a free economy. What we have at the moment is an economy which needs help. What we have is a population which is facing a cost of living crisis. And at the same time, as you know, the head of BP referred to it as a cash machine, you know, they are making vast profits, which they did not expect. Now, in those circumstances, for a year, as a one-off, we should be helping the population in this country through a short-term windfall tax, which would have raised £11 billion and could have helped families.
Have you really thought this out? I mean, this sounds like a short-term measure, but I mean, do you think that they're going to come to help you next time you need it? Because we have an experience in this country where the oil producers just aren't willing to invest in the longer term. They don't trust the government because of what they've done. And certainly the oil companies in your country aren't going to trust you after you do that to them.
Well, what we have in this country at the moment is a cost of living crisis. And what we're looking for is not for any long-term damage to the oil and gas industry. I spent a decade of my life living in Aberdeen, which is the oil capital, now the energy capital of Europe. 200,000 jobs in this country are dependent on the oil and gas industry. We have no intentions of doing anything which will damage the oil and gas industry. What we want the oil and gas industry to do is help the population through this crisis for a short term. That is what we are talking about. And that is what everyone, including the government, now agrees on, but they didn't act quickly enough. And the other thing that we need to do is reduce VAT from 20 to 17.5%. And that money would help put money back in the pockets of families who are struggling. And it would also help tackle inflation, because in 2008, that's exactly what Gordon Brown did, and it brought inflation down. So this government
I remember when it used to be 17.5. Christine, let me ask you about something else, though. We've heard the leader of the opposition calling for a snap election. Do you think we'll see one? Is the Liberal Democrat Party calling for that? Would you like to see an election?
What we want to see is a change. What we think is that we now have a prime minister who not only does he not enjoy the confidence of Parliament anymore, he doesn't have the confidence of many of his own cabinet, of his own party, and certainly of the country. He has led a government which has been completely out of touch with what the country needs. And what we need now is change. We need a government that's in touch and will target help to those families who are struggling through this crisis, pensioners who don't know if they're going to be able to heat their homes this year. That is what we need.
Thanks very much, Christine Jardine, UK Liberal Democrat MP and Treasury spokesperson. Thanks very much for joining us. Later today, of course, the UK Prime Minister Boris Johnson will be in Parliament answering questions from the opposition and, of course, from his own MPs. That is PMQs, Prime Minister's questions, taking place a little bit later on today, 12 p.m. London time. You can watch all of the action at Bloomberg.com or at Bloomberg UK on Twitter and Bloomberg News UK on Facebook. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Anna Edwards out of London and Kailey Leinz in New York. Tom Keene, co-anchor of Bloomberg Surveillance, joins us now to tell us about his show today and the single best chart that you've chosen. Tom, what is it?
It's the reality that Boris Johnson faces, and I think particularly for those waking up in the United States, we don't understand how different it is in Germany. We talked about that yesterday, John, and how different it is for the Prime Minister of the United Kingdom. This is a crushing chart, and this is what's happening in the Midlands. Anna Edwards is living this. It's not the same over there, folks, for power. It is straight to the moon, up 332% on a monthly one-year average. Basically, your electric bill is £3,000 a year, maybe as an average as well. All of this is a challenge for Boris as he loses power.
Yeah, really interesting chart there, Tom, showing us those electricity forward prices. Yeah, we have a complex system that puts caps on it for consumers, and those caps are reset at two different times of the year. So we could still see quite a lot of upside to come. So to talk about this commodity story, who do you have lined up?
We've got Ed Morris lined up, very geopolitical, and of course he's an outlier pushing against the panic of $150 a barrel. Dr. Morris frames out that oil could move lower as it has the last week. But we have a wonderful set, including Leslie Vinja-Murray of Chatham House, Yes on America, on the fractious United Kingdom politics. And we'll talk to Michael Darda about PG Tips Tea, which Tesco is in a battle fighting over because PG Tips Tea only uses the tips of the lees, Anna.
Tom.
Well, that's the difference. Apparently, this is important. Well, Matt and I, you're speaking to the converted here on the subject of morning tea because Matt is a regular consumer.
Yeah.
Thank you very much.
The price on Tang is held steady.
I love Tang, but I drink Builder's. It's called Builder's tea for those of us in the know, Tom, PG Tips. Let's take a look at what else we're watching today. I'm watching mortgage applications coming out in just about 1 hour's time. I'm fascinated by the housing market here in the U.S., and I think it's safe to say the U.K. is going through similar things. As rates rise, this incredibly tight housing market is starting to loosen up. So it'll be interesting to see what 6% does as opposed to 3% just 3 months ago.
Yeah, that's in focus. So thanks to Tom for giving us his thoughts. And Matt, I'm going to be focused on the UK politics story from here as well, watching Boris Johnson as he faces Prime Minister's questions. I mean, it's often a very rowdy affair. It could be rowdier than normal today, of course. He's lost 13 ministers and aides to ministers in recent days. He's not going to be just facing PMQs, though. He also goes on to a parliamentary liaison committee, which is going to be talking about integrity in politics and the rule of law. For those who criticise him, these are key topics. So we'll certainly bring you all the latest on the UK politics as it continues to play out. That is it for Early Edition. Surveillance is ahead. This is Bloomberg.